Hello, this is Troy Eckard. I am the CEO and manager of Eckard Land and Acquisition. I'd like to take about 8 to 10 minutes and talk to you about Eckard Land and Acquisition and our particular directive in acquiring mineral interest across the United States. I'm often asked by inside partners as well as outside energy experts where I see the mineral market going and how Eckard Land and Acquisition plans on being involved in that particular space. So let's just talk about where I see the mineral market today. There's no question that in today's environment, anybody with liquidity and the ability to understand how minerals work in the oil and gas sector, you have kind of a wide open field with regard to buying and acquiring mineral rights. The question is, most people have no clue which minerals to buy, why they're going to buy them, and in what particular area of the country, because there's literally tens of millions of acres that you could consider. What our job here at Eckard Land and Acquisition has been for 35 years, taking all of our expertise and all the different areas that we've been involved in, from fabrication to pipelines to saltwater disposal wells, 3D seismic acquisitions, on and on and on, to take a cumulative concentration of expertise and start to look at where are the best places and the safest places to invest in the mineral sector over the next decade. But one of the advantages that we had here at Eckard Land and Acquisition is that we realized and recognized over 24 months ago that the oil and gas industry was starting to take a downturn. In fact, when we started buying minerals in the summer of 2018, we noticed within the first 180 days that the rig count had dropped by 35 or 40%. We noticed that the price of oil was languishing at $55 a barrel. But more importantly is that we noticed that many of the investors, the private equity funds, the large institutional buyers, were no longer present making offers to buy minerals. We saw that as an absolute perfect time for our company and our internal partners to take advantage. So we then committed the resources and the time to start a plan of action. That plan of action is not something that we took lightly. It's something that we knew we would take in very careful, thoughtful processes of putting the right team in place, the right personnel in place in order for us to take advantage of what we see as a wide open field of opportunity for the next 10 years. Now today, the reality is 99% of qualified investors have not a clue how oil and gas minerals work. They don't understand oil and gas. They don't take the time to ask questions. They don't do even the most basic homework. Those investors that do in fact participate in owning direct assets in oil and gas do so usually through, hey, let me throw a few dollars out and see if it works. I'll see whoever sounds the best, or at least I'll do a very peripheral effort in due diligence before I make those decisions. Well, what I want to point out to you today is that we as a company inside of a very prolific industry have applied 35 years, 3.5 decades of expertise. I started in the business in 1985, and we are accumulating data and information that continually tells us the right locations, the right oil companies, the right oil and gas basins, and the right states in which we think are the best opportunities for owning minerals. Now, as a potential investor, there's a couple of things you must understand if you have any desire to own energy, whether it be in public stocks, bond portfolios, or whether it's direct ownership of assets. There is a great deal of opportunity. There is more opportunity than you have money, I can tell you that. You could put together $1 billion fund and we could have it spent inside of a year on distressed assets. Where we're going as a company is we're going under a very simple premise, and that premise is a plan that I put together 5 years ago called AML. We want to aggregate assets that are small, fractional, valuable assets that most large money suppliers, money sources, have no interest in doing the hard labor to find. We like finding those crumbs because those crumbs collectively put into an aggregated bucket are worth about 3 or 4 or 5 times more than they are as individual assets. We don't mind doing the work because we like the lift in value. The second thing is maturation, AML, the maturity of those assets. Today, every investor out there wants to see how quickly they can buy something and flip it. That's why they call them flippers, right? Every time I see a fish in the dock and it's flipping around, it's because it's running out of air. It's dying. That's what flippers do. They run out of air. They run out of opportunities to flip, and so they don't really have a model that works. They simply have an opportunity they try to seize. Mineral and mineral investing is not a flipping business. It is a business of retention, creation of growth and cash flow. It's something that creates a true cornerstone to one's portfolio. So AML, aggregate, maturate, and then liquidate. Now, why would we liquidate assets that we believe have a long-term value? Most of the minerals in these shale basins we expect to have an economic life of 25 to 50 plus years, depending on where it's bought, the types of drilling, etc. But let's just say it's 25 to 50 years. Why would I want to liquidate a solid, low-risk, real, tangible piece of real estate that's cash flowing revenue checks every single month? That's what royalty payments do. They send you a check every month. Well, let me tell you why. It never hurts to get to what I call par. It never hurts to aggregate, mature your assets, and then recognize, depending on the market conditions, there's really a good opportunity that you could peel off maybe 25 to 35% of your acquired portfolio and sell it into a frothy market where investors out there who are uneducated, they didn't get involved, they didn't understand you buy low, sell high, and they want to be in the mineral market because if oil prices do rise over the next 3 to 4 years, like I suspect, $65 to $125 a barrel is a very appealing time to get into oil and gas minerals for the uneducated. I have no problem selling uneducated, unsophisticated buyers minerals for 3 and 4 times what I pay for them today. So the liquidation part is the ability to use 35 years of experience to know that there is a healthy reason to liquidate part of your portfolio, to refill your coffer so you can go back out the next 5 years and do it again. Eckard Land and Acquisition today is on a mission, and our mission is very thoughtfully planned out. It goes like this. We're going to keep buying small aggregated mineral interest. We're going to invite our partners to participate with us, those who qualify and have an interest. Most importantly is, even if you're out buying stocks, there are publicly traded mineral companies. The choice is yours what you do with your money. We're here about educating and informing, not about soliciting. So from that standpoint, our plan involves the following. We believe there's going to be 3 types of investors that are out there looking to acquire minerals in their portfolio. Individual high net worth investors. There's going to be what we call family offices that are larger institutional buyers who want to buy in $2, $5, $10 million tranches because they're really developing an internal portfolio for a much larger concentrated asset group. And then there's what I call the professional financial advisors. There's going to be the registered investment advisors, the wealth managers, the CPAs, the estate planning attorneys who are saying, how do I move from a current portfolio that has been affected by the current economic conditions and this current COVID-19 virus, which has changed all the economics across the board. We have very smart investors who have very healthy portfolios in real estate up until 2 months ago. In the last 6 months, we've seen a massive increase in investors' attention on minerals because they want to lighten their position in real estate, traditional real estate, and exchange it for something like minerals, which are no capital costs, no exposure, no liability, no empty apartment houses or no empty retail space. It's simply a revenue check every month, and they're switching and rebalancing their portfolio. We have heavy stock investors who are saying, we're glad we're back at 24,000 on the Dow, but how do we know we can get back to 30,000 on the Dow? What do I do to create cash flow and yield and return? We have very wealthy clients who have bond portfolios, and they're watching their bonds be called. They're seeing their bond portfolios making 5.5%, 6% based on AAA bonds, municipalities, or state-issued bonds. Now those bonds are being called, replaced with 2 or 3% coupons. The fact is, what do they do with all that cash? We're headed for a negative yield market, but more importantly is, Eckard's plan is as follows. We take advantage of having that opportunity because we know that in the same breath that all these other industries and other sectors are going to be affected, we know that oil and gas started over 18 months ago with this downturn. So we've already been in a great buying opportunity when it comes to minerals across the U.S. What we now know is we've been given like a golden ticket of opportunity. It says, look, everybody's left the industry. Troy, get to your desk, look at your maps, figure out what you're going to do. Figure out the best places to buy minerals because they're going to be desperate sellers. Original mineral owners who need to pay off their farm or that new tractor or the play toys they bought when oil was at $65 a barrel 2 years ago. And now their cows can't get to market to be slaughtered. They can't get paid. Their vegetables aren't being bought. You're not having the same kind of productivity at the very core of mineral ownership. The flippers who bought and sold minerals the last 2 years, they're stuck. They stuck owing a ton of money at the bank. They can't sell their minerals. Nobody's buying, and now they have a choice. Sell their best minerals at the lowest price to stay alive or go bankrupt and have the bank seize all their assets. We know, and we know this is true because that's what we've seen for the last 6 months as we've been one of the most active buyers in the Anadarko Basin in Oklahoma. So this comes from experience, not from conjecture. Now, as far as our plan, it's very simple. We believe there's an opportunity to accumulate a $250 million portfolio of minerals in the next 36 months. We're going to be putting together ideas and strategies that we think will match the revitalization of the energy business. We're going to figure out who's going to come out of the starting gate to drill new wells. Which companies will take their drilled, uncompleted duct wells and turn them on first? Who will have the stronger balance sheet that allows them to access capital to reinvigorate the supply side, which has been completely decimated? We're going to figure out which states have the best regulatory environment that allows the fastest way to market, the fastest way to put in storage and pipelines. So we get to use 35 years of expertise with no pressure. We have no bank debt. We have no outside debt other than internal partners that we work with. So we have no pressure on creating a mineral portfolio based on some kind of a hurdle that we have to cross. We're not publicly traded. What we do is we educate, we inform, and we decide what we're going to do. Now, why did I choose a $250 million portfolio? I don't think there's that many what I would call Class AA minerals to buy. Eckard Land and Acquisition has a very strict parameter and very strict criteria for the minerals we want to buy. With that strict criteria, there's only so many minerals that can be had. What we do know is we don't mind being patient. What we do know is we don't want to change our parameters or criteria. We feel like we can accumulate $250 million in minerals in the next 36 months, and that will in turn be a significant higher value as the market on commodity prices rise. We will then take part of our portfolio, sell it into a frothy market. We'll reload and do another $250+ million portfolio from 2024 to 2029. So this isn't about selling a deal. This isn't about looking for investors. This isn't really about anything other than sharing with the investor community that the greatest opportunity probably you've seen in oil and gas is sitting right in front of you today. How and if you take advantage of that opportunity is up to you. We are very well versed in working with high net worth investors to educate you and inform you. But we have a plan. It's well thought out. It's being executed today. And if we can help you in any way, contact our team. If you have minerals, you want to know if they're any good or not, if you want to know our opinion, send them to us. We'll tell you. If you already have a mineral portfolio, you want to know what's going on with your minerals, if it's in areas that we have an expertise, we'll share that with you. This is about you as investors collaborating with a very smart, expert company in minerals to determine how we can help you. This is Troy Eckard. I'm with Eckard Land and Acquisition. I want to tell you something. We have a plan. We're executing that plan, and that plan is going to be very successful. We hope you join us somewhere along the way as a friend, a co-mineral owner, or someone that we can work with in being very successful over the next decade in owning one of the greatest assets in this country, the very cornerstone that fuels this economy, oil and gas mineral rights. Thanks again.